Welcome back to another episode of Multifamily AP 360. And today's our guest is Ivan Barratt from the BAM companies. Welcome, Ivan.
Hey, thanks for having me.
Yeah, thank you very much. A little bit about Ivan. Ivan Barratt is a 26-year veteran of the real estate industry and currently serves as founder and CEO of the BAM companies. Ivan is a multifamily owner, fund manager, and operator who specializes in large apartment communities throughout 7 states. Since 2015, Ivan has raised nearly 700 million in equity, acquired over 9,000 units, equaling over 1.7 billion in transaction volume. The BAM companies has grown to a best-in-class 7-time INC 5000 private equity firm. Today, Ivan focus his time on finance and company strategy. So with that, Ivan, you want to add anything to your background?
Oh gosh, I think you did a really good job there. Maybe the only thing that wasn't in the some of the accolades there, what I'm most proud of is some of the workforce awards we've earned, best places to work, and things around culture that we've been able to create here at BAM on the property management side of the business.
Yeah, thank you. And you have been in the real estate industry like for over 26 years. So what initially drew you to real estate and how did you get started?
Like a lot of people, I got the taste for it maybe just a little bit earlier than others. I got the real estate bug. My dad is an attorney and had rental properties growing up. So I got an early exposure to owning real assets with cash flow and appreciation. And it's been about 26 years since I graduated college. I actually went to Indiana University for finance and real estate, so got a really good foundation there in development, finance, valuation, appraisal law, a whole gamut of operating in real estate, and worked for a mentor for several years after that. And then in the first major correction of my career, 2008, I had the idea of starting my own company. And that's when I hung out a shingle and started BAM first as a property management company. We grew that management company, both doing small deals for ourselves, but mainly in the early days serving other investors and learning a lot, making lots of little mistakes on a small business, but with dreams of growing that to a much larger company. And once we got enough size and scale in our own syndications, we stopped doing third-party management for others and now just manage our own properties on our vertically integrated platform and moved away from the syndication business to fund management, now buying portfolios of assets and offering those to our investors, now north of 1,500 investors of all shapes and sizes that invest alongside us.
Awesome. Thank you very much. That is a great achievement. So we will explore a little bit on property management side a little bit later. So the BAM companies have had impressive growth over the years, including being a 7-time INC 5000 honoree. What do you think has been the key to your company's sustained success?
Gosh, there's 3 hours of podcast material on what it takes to be a successful company, but at its root, it's been a burning desire to own a large company that can truly grow on its own and one day continue on without me and be a legacy. We had this crazy idea, Rama, back early on in the management days when we were hiring and firing and struggling to have maintenance folks and struggling to find good management. We had this crazy idea, what if we had a management company where people liked their job? And as luck would have it, very fortunate to find some people early on who bought into that idea of having a property management company with great culture. And we really focused on that. It's a people business, it's an operating company. And I know this is going to shock you, but when you have great culture and you treat people well and they like their job, they tend to stick around, do a better job, and tell a few other people about how much fun they're having at BAM. And that has really become a big force of momentum for us as we grow and scale. We're not perfect. We still make mistakes. We still learn. But we've got a lot of great people here who help execute that strategy of wealth and cash flow on behalf of the investors who invest alongside me and my partners.
Yeah, thank you. So you mentioned about culture, right? So how do you approach company culture and leadership, especially as the company continues to grow and scale? And what principles do you prioritize in creating strong organizational foundation?
Yeah, early on, I had to really do a lot of self-discovery on what my talents were and more importantly, what I'm not good at. And finding other people, a great example would be my business partner. Him and I are opposites. He is a much better operator than me, much steadier, really great at keeping the proverbial trains running on time. It is, like I said a minute ago, a big people business. And any successful team, you've got to have a lot of different talents, a lot of different folks that are doing different jobs. And then learning to get out of their way, letting them make mistakes, letting them grow is a big part of it. It's one of my favorite core values that we have here at BAM. These are not just aspirational core values, these are who we are. But my favorite one is when people grow, BAM grows. And we take that very seriously. Being a loyal, loving family. Yes, we have residents in those units. Some people still call them tenants. We call them residents. We want them to have a great experience, but most of those residents are in and out in a year. That's just the nature of the beast in a transitory asset class like multifamily. And the opposite side of that is those employees are here 2, 3, 4, 5 years. We now have people celebrating 10 years at BAM. And so taking care of them first, being more attuned to what our employees need, our family needs, again, versus putting the resident first, which a lot of companies do, we think is a mistake. It's
Got it.
short-sighted.
Yeah, thank you. So what is your team size at this point?
Oh gosh, north of 200, maybe close to 215 now. Yeah,
Got
maybe about 40 people here at corporate headquarters, asset management, legal, HR, accounting, the private equity side of the business, the capital management side of the business, and then the balance of those folks are in the field, on site at a community, or a handful of regional folks that are overseeing different portfolios within our total portfolio,
it.
similar to other companies that have regional managers and regional maintenance supervisors.
Got it. So you guys focus on only value and multifamily, or what kind of asset classes, what size of deals you're focusing?
Yeah, Rama, we are an inch wide and a mile deep. We are focused on garden apartments. Nowadays, they're newer than 2010. We are heavily focused on Midwest, our thesis being the tortoise versus the hare. Midwest is steady Eddie. It doesn't boom, but it doesn't bust either. So we love steady markets here in the Midwest with great schools, great jobs picture, clean, safe, and growing suburban populations, our big focus. And then a lot of the value that we add is on the operational side. So versus swinging hammers and buying older vintage assets and doing big renovations, there's been an opportunity, at least now in the marketplace, to synthesize and enhance operations, buying assets from groups that aren't running them as well as they could be, targeting out-of-state owners with mediocre third-party property management is a great target for us. So we're looking for that newer, nicer asset where there's still upside on ancillary income, room to raise rents, but also reduce expenses and operating costs with our vertically integrated team. Big part of that, our in-house maintenance team is a group of rock stars, homegrown here at BAM, and a few other ways to save a dollar here, save a dollar there to get that effective value add, but not through a big physical renovation.
Yeah, got it. So what are some advantages going with vertical integration?
The biggest advantage is management. So I look at this as buying businesses. We look for a business that's being mediocrely run, where we can run it better and enhance the value by enhancing net operating income for the entrepreneurs in your audience, very similar to EBITDA, just enhancing the amount of earnings that come off of that business. Now we've done about 40 of those deals. It just so happens that business is an apartment community. So for me, it would not make a lot of sense to have outside third-party property management running my business for me. We want to control every piece on the chessboard and have it vertically integrated. For example, we're not calling outside contractors hardly as much as our competition. We're able to fix those big issues with HVAC, electrical, plumbing in-house, with our certified technicians who work on behalf of the investors. That dramatically reduces cost. For us, it just makes perfect sense to have vertical integration. We have in-house construction management. So when it's time to put on new roofs, or gosh forbid, a building burns down, or there's a bigger capital expenditure that needs to occur, we are able to manage that in-house versus hiring outside third-party general contractors who have to make profit. Our game is not to make profit on the maintenance or the management or the construction management. It's to drop that down to the bottom line, enhancing the value of the asset on behalf of us, the owners, and our investors who are owners as well.
Deal one onwards, you guys are vertically integrated, right?
Say that again?
So from deal one onwards, you are vertically integrated, or at what stage you are integrated vertically, vertical.
Yeah, so again, I started the property management company first, which I get is very unique in our space.
Yeah.
But maybe I just wasn't smart enough to do it any other way. But we started the property management company first. I had a brokerage license. I'd been doing real estate for almost 10 years at that point, and provided a service to out-of-state investors, managing small deals in my hometown. And that was the catalyst to being able to scale a service provider. Now that service provider is captive to me and my investors doing only our deals.
Yeah, got it. Thank you.
Much harder to do it later on when you've got 1,000 or 2,000 units and you decide to
Yeah,
vertically integrate. The problem is you haven't made all those mistakes that I've already learned from.
yeah, absolutely. Absolutely.
Yeah,
Thank
I learned them on a 30-unit deal and a 40-unit deal and a 60-unit deal before I started buying 300-unit deals.
Yeah, good. And you have raised nearly like 700 million in equity and acquired over 9,000 units. So what do you consider the biggest challenge when scaling to real estate investment business this level?
In some ways, it gets easier at this size because we've got a track record, we've got a big team, we've got a lot of great people here that have expertise in different areas. I think right now the greatest challenge in our space is getting that capital stack finalized. Debt has dried up for a lot of folks. Equity is certainly much harder to get right now. But at the same time, Rama, it is the third correction of my career. And the last two corrections, we made a killing. In 2010, of course, I was doing small deals, so my killing on a percentage basis was great, but they were small deals, so the dollars weren't huge. And the second correction, a lot of people missed. It was 2 quarters of the very beginning of COVID when everyone thought it was 2008 2.0. We did our first fund, and that fund has been by far my best performer so far. And right now, we've put 260 million of equity out the door to buy about 650 million of real estate, or to capitalize, mostly acquisitions, but some development deals as well. And I think we're going to make another killing on this one because, again, we're able to buy when most people can't.
Got it. Got it. So share me a little bit more about why you switched to funds. What are the some advantages with going with that?
Yeah, yeah. So what's in it for me as a fund manager? I get to lengthen my runway of raising capital, and I can have more capital at my disposal when deals hit. And so if more than one deal hits at a time, I've got more dry powder, more capacity. And for the investor, it does a few things. Namely, though, it reduces their risk. Instead of buying, maybe they're putting in 200 grand. My fund minimum now is $200,000, accredited investor. That 200,000, instead of being spread across one 250 unit property, Rama, it's now spread across, in Fund 4's case, 1,600 units in 6 assets, 6 communities across 4 markets in several states. And so there's a little bit more diversification there. And at times like this, some properties are underperforming. Some properties are doing just about what we thought they would do, and some properties are outperforming. And the fund smooths that all out. The investor no longer has to guess, hey, is this deal Ivan's home run? Is it the next deal? Did I miss the home run? The investor now has to underwrite me as the manager and decide if I'm a good bet versus looking deal by deal. So it takes a lot of trust to get a fund off the ground because you're basically telling your investors to, hey, trust me, my team, and my track record versus underwriting a specific deal. But what that also does, it reduces risk and it increases the probability of a higher overall return. Because now you're exposed to, say, 6 deals. A couple of them should be home runs that pull up those returns versus trying to cherry pick. And let's be honest here, when we're buying deals, I don't even know which ones the home runs are going to be for sure. They just end up that way. No matter how much we underwrite them or how many models we run, some are going to be home runs and some are going to be more within line of normal expectations. And by having the fund, the investor gets to participate in all that. And that's how I achieve alpha. I reduce risk by spreading that across several assets, and I increase the probability of a higher return.
Yeah, yeah, great. Yeah, thank you very much. And real estate market can be highly cyclical, right? We know with ups and downs.
You think?
Yeah, absolutely.
It is
So,
absolutely a big cyclical market. That is for sure.
yeah. So with your vast experience, how do you access, how do you when to take risks and when to step back? And what indicators and factors do you rely on most when making these high stakes decisions?
Yeah, it's a great question. We could spend a whole podcast just on that question, right? So, like I was mentioning earlier, we're in this third correction of my career over the last 25, 26 years. And being in a position to step on the gas and be greedy when others are fearful it's an easy thing to say. It's a much harder thing to execute when equity and debt dries up to be a buyer. Luckily, and I've been very fortunate to be in a position to be able to do that. We've got a great bank, a very big bank that works with us, helps us do agency loans and loans on their balance sheet and syndicated loans to partner banks. So the debt for me has not been a problem. And I'm very fortunate to have lots of investors in my stable that have been with me a long time, where I've been able to build trust. There's opportunities in every phase of the market, but there's these times, these punctuated times, where it's a great time to sell. We took a lot of profits and made a lot of sales in 2021. And there's these other times where it's pretty much a big buyer's market, another extreme part of the cycle where we're not selling anything and we're just buying. So for me, it's really studying the market, understanding what's going on, where we're at in the cycle. It's like the seasons, Rama. Winter's always coming. We don't skip it. It might not be cold this year, or it might be a freaking Arctic blast like we had this year in the Midwest, making up for some of those mild winters. But spring also always follows winter. And so knowing this is a cyclical business and knowing some of the inside information by being in this business for as long as I have, we can make calculated bets that might seem like we're taking a lot of risk, but really in many ways we're not. We're just behaving in a way that matches the market we're in.
Yeah, great. Thank you very much. Would you share any best experience so far?
Give me a category. Best
Best
experience.
investing experience.
Gosh, we could go several different ways with that. Some of my favorite deals have been bought in corrections. Indianapolis goes through its own cycles. Right now, it's getting tough to find a deal in Indy because the institutions are coming back. In 2023, I think at the bottom of this current correction, we bought 3 institutional suburban garden apartments, 2 to 300 unit deals, 2015 to 2021, 22 vintage assets. We were the only bidders in the market. Literally one LOI for those deals. And they came to us off market. And that was just a fantastic time to buy. I think we'll end up looking pretty smart on those. The best investing experiences are when the business plan goes according to plan.
Yeah, yeah, totally agree. So would you also share any challenging experiences?
Yeah, I'm very fortunate to decided to start small early on. I made a lot of mistakes in hiring and firing people and getting that management company off the ground. Going from small deals to my first big apartment deal was 35 units. Everything that could have gone wrong on that deal went wrong. We weren't able to raise rents. It was an old, I thought it was a C asset, turned out to be a D. Sewer line collapse, bed bugs, drugs, non paying renters, evictions. Had a carport collapse in a snowstorm because of the amount of snow that landed on a flat carport roof. Collapsed that old carport. More bed bugs. So many hard lessons learned on managing properties from that deal. And thankfully, that was my first big investor, still an investor with me today in several deals. We didn't do as well as we thought we would on that 35 unit deal. We still made a positive IRR when we sold it in 5 years. And I paid a lot of tuition on that one and several others. We've never lost investor capital, but we've certainly made lots of mistakes. And it's that old saying, fail early, fail small before you go big. And I'm glad I'm through that. It was a formative years I hope to not go back to.
Yeah, thank you. So, what's your take on current real estate market? Inflation, high interest rates, environment, tariffs, supply demand issues. What's your take?
Let's there's a lot of noise out there right now. There's a lot of volatility, right?
Yeah,
But let's just talk about what we know to be true. Number one, on any 10-year period in American history, real estate has been worth a lot more than it was at the beginning of any 10-year period. We know that the dollar continues to decrease in value over time. We know that there's inflation. We know that rents will go up, and we know that the purchasing power of the dollar will go down. So I really like having hard assets that I can improve and that cash flow. And if I do well buying those in markets where people want to live and work and play, maybe I don't sell them every 5 years. Maybe I have to hold them for 7 instead of 3 or 5. But I know that staying power will eventually help me, and time will eventually do most of the heavy lifting. Today, here in mid March of 2025, I know that the federal government's got to roll over 9 or 10 trillion of debt in the next 9 months. So I know they're going to get that 10-year rate down here pretty soon, which is going to help assets. I know that people need a roof over their head. I know that we're short of housing. And so I try to really focus right now. It's fun to watch the news. It's fun to study macro and look at all these economic things going on and trying to extrapolate what that looks like for the future, geopolitically, economically, and locally. But I think it's better to focus on what are the known knowns on the long term. And if I set up my portfolios and I construct them to have staying power, then we'll be in good shape at some point as the cycle changes. I think a concrete example of that, my partner had the foresight to help build a bigger reserve than our lenders mandated. Right now, across our portfolio, we're 6 times bank mandated reserves in cash. And so those funds have excess cash on hand if we want to buy down rates, cash in refis. We've been able to do that on some of the assets in our portfolio. Zero capital calls to our investors because we raised that, I'll just say it, we raised that when shit happens pile of money before we needed it.
yeah, good. What's your company's approach for next
I'm gonna
five?
try to get you to smile or laugh at some point, Rama. You're a tough cookie, man. I'll figure this out.
Sure. So what's your
That was a laugh. That counted.
so what's your take on what's your company's approach for next 5 to 10 years?
I don't look 5 to 10 years out. I let time do the heavy thinking on that. I think humans as a species are terrible at predicting the future. We can't predict what we don't know already. It's easy to Monday morning quarterback and think, oh, I should have saw that coming, but we're pretty bad at seeing it coming. What I do know is that people can't disrupt housing. They need a roof over their head. More people every day are waking up to how great the Midwest is for quality of life, affordability, jobs, raising a family. And there's still a lot of undervalued markets here. We're just really focused on, I'm a big fan of Kaizen, continuous improvement. We're just trying to be a little bit better tomorrow than we were today. We're trying to be a little bit better today than we were yesterday. And if we keep focusing on just these little incremental improvements at every aspect of the company and every position of the company, then over time, again, time does the work here. Over time, that compounds.
Yeah, absolutely. So let's switch towards personal side. Any habits, any personal habits that are helping you to be successful?
My favorite thing is own the morning, getting up with the kids and getting a workout in, getting some time to think and read and focus on the big work before I let email and Slack and notifications interrupt my day. So I don't do breakfast meetings. I work through lunch and spend a lot of my morning focused on the big stuff and that routine before I let the day creep in and start becoming reactionary to emails and notifications and that kind of thing. I don't expect anything of anyone else that I don't expect of myself, so I try to improve a little bit each day. Voracious reader, love consuming information in various ways, podcasts, YouTube, books, that sort of thing.
Yeah, sure. Any one personal learning that played major role in your overall personal growth or business growth?
Yeah, to the folks out there that are interested in personal growth and business growth, some of the rocket fuel for me is being in peer groups and having a coach in different areas of my life that I want to get better at something. So whether it's physical, spiritual, business, personal, if I'm looking to improve something in my marriage or fatherhood or whatever, I've usually got a coach involved, somebody that's been there, done that, that's got some wisdom to share. And then the yin to that yang is being in peer groups, both industry specific and agnostic, where I can learn amongst other peers that have value to add to my journey.
Yeah. So any books that impacted you?
Oh gosh, the library is pretty extensive. Lately, I've been on a biography kick, and I'm currently finishing up Paul Volcker's biography, which is all about the Fed chair through most of the 70s and into the early 80s, and how he reacted to inflation and stagflation and decoupling from a gold standard. So that's been some informative history.
Awesome. And how can listeners can connect with you, Ivan?
Bandcapital.com.
Awesome. And thank you very much. Thank you.
Pleasure to be here.